In today's video, we're focusing our attention on Tesla, specifically looking at Tesla options from a day trading standpoint. I'm going to compare and contrast three different deltas, the 30, the 50, and the 70 delta options, across two different expiration cycles. One is from this week, the second expiration is next week's expiration cycle. When we go through this exercise, I think you'll find that there's a few patterns that these options tend to follow. And in particular, if you're looking to take advantage of volatility setups, there's one strike and expiration which stands out. Now to get started, let's first talk about the setup. The setup in Tesla today came as a result of Tesla being one of the few stocks on our Stock Volatility Box Live scanner, specifically the Overlap tab. The Overlap tab, think of it as your best of the best. It's looking for places where you have an hourly volatility edge along with a daily volatility edge. Today, Tesla was one of those stocks which appeared on this list early on in the morning. Tesla appeared right around that 7:30 a.m. mark, about an hour after the markets had opened, telling you that you have a volatility edge. So that's where the setup in Tesla came about, why Tesla caught our attention. Now that volatility edge came when price action breached our volatility box models. This is the aggressive daily volatility box models that I have loaded on, and Tesla breached our daily volatility box models. Early on in the morning, we had that quick touch, and then that second touch when price action fell deeper inside of our clouds. Now that's step one, where things get interesting for us. We want to see this volatility box breach. That tells us we have a volatility edge, and now we're looking for, in this case, a buy the dip type of setup, a reason to look at price to reverse. Now there's two triggers that I like to use. The first trigger is the edge signal confirmation. This is for those of you that like to buy in overbought, oversold territory. It's a simple green arrow, tells you when we're now officially in this oversold area, looking for buyers to step in. If you'd like to be a little bit more cautious, wait for momentum to reverse. That happens with this blue dot right here, telling you that 3 EMA has crossed above the 8. In either case, if you were to just take a step back, forget the indicators, and think about what price is telling you, we're looking for clues in which we have a volatility edge, and once we have that volatility edge, for signs that, hey, buyers are now stepping in and we're looking for this reversal to kick in, taking advantage of an entry where your risk to reward is in your favor. Your risk is quite small for a reward that goes much bigger than what you're risking in the first place. Now in Tesla today, if I come back to a clean chart, you can see what happened from the entry point here. We had the first spike up. This is what I'm calling T1 when we go through our options pricing in just a second. We had the retest, which for those of you that do like to trade options, this retest offers you even better pricing than the one I'm using for what we will call the entry. And I have also marked the highest pricing that we saw the option touch at the point in the day, which was between 11 to 12:30 p.m. Pacific. As we go through the different strikes, what you're really looking to see here is how the entry price varied to just that T1. So the initial spike up, this is you're out by 8 a.m. Pacific, the first 30 minutes of this trade. And the second price that we'll be taking a look at is if you stayed in this trade for much longer, all the way up till essentially close to the close, about 30 minutes before it, and what that highest price that this options touched was. Now with that, let's get to the options table, and I'll reveal everything right off the bat, but let's go through this step by step. The first table is our 3 days to expiration table. These are the closer dated options, and here what I noticed is the liquidity was better and the volume was better. Now, specifically inside of the 3 days to expiration, it was the Delta 30s which stood out to me. Not only were these the most liquid, but they also moved the most. They were the most volatile, which again, if you're looking to take advantage of a setup in which you think you have that risk reward edge, it would make sense to really go for this gamble. Now, this is very much that go big or go home, because these same numbers you'd have to be comfortable looking at on the reverse side, on the negative side. Now, the Delta 30s at the time of entry, we're going for a little bit shy of $6, $5.60. This may still be considered rich for many account sizes, and that's what I think you get when you're trading Tesla options. You have to be willing to spend for this premium. Now, this $5.60 option in that first burst up, that T1, went up to a total of about $6.85. And I've tried to use conservative numbers for this T1 column across the board. That represented a gain just a little bit north of 20%, 22% to be exact. Now, the highest that this option touched was 940, which represented really the highest gain across the board here, nearly a 68% gain. This is what I think you would call that lottery type of option, but you're trading this lottery option really with probabilities on your side and a little bit more sense. You're not looking to try and take advantage of butterflies where it has to be an exact pin or anything of that sort. Really, you're just trading Delta 30 call options when you have a volatility edge and really letting price do its thing. A very simple strategy. Now, if you wanted to mitigate that risk just a little bit, you could go up to the Delta 50s. You did have to pay up for these options, $7.85. Your gains went from 22% to about 15% for T1, but still much higher than if you just jumped an entire expiration cycle altogether. That's something I think that should stand out right off the bat. If you went to next week's expiration cycle, your volatility was much less. For those of you that like that, this is a very easy way to turn this crazy Tesla volatility into something a little bit more controllable. Simply go out to next week's options expiration cycle, and now all of a sudden you can still use leverage, but that leverage allows you to control the volatility a little bit more by adding a little bit more to that theta component of the option. Back to our 3 days to expiration, the Delta 70s were the ones that moved the least across the board. They were the most expensive, they moved the least. So again, if you wanted to trade that closer dated option, but you still wanted to reduce the volatility, the Delta 70s was a nice way to do that. In my opinion, though, that's a little bit counterproductive, given that I think this entire setup, the whole point of this, is to find these Delta 30 sort of anomalies. The place where you get these really nice asymmetric bets being rewarded simply by taking advantage of what, for us, everything started off with, which was a volatility edge. Hope you found today's video useful. Take care, everyone. Again, for all Volatility Box members, I just looked at Tesla from today's video, but there were a lot more stocks, not just on the overlap tab, but also the daily tab, which have liquid options that appear today, including several ETFs like XLU and XLE that you can take advantage of with both options along with the actual underlying. Take care, everyone. Good luck trading, and I'll see you in our next update.